This video is for informational purposes only, based on personal research, and should not be considered as financial advice. It does not constitute any recommendation to buy, sell or hold any securities. Viewers are advised to conduct their own research.
Hello everyone, good morning, Sunday. Very warm welcome to SD Sectoral Outperformance Report. This is now a new series. I'm sitting down with every one of you on a Sunday to analyze the Indian market, focus on which sector is outperforming. If it's a new sector, I'm analyzing with a short PPT, key important points, what you should look for in that segment, and look at some of the stocks in the segment. But please consider that none of this discussion is a trade or investment suggestion, because I strongly believe in risk management rule number 1, that you should never ever listen to others and jump on a trade and investment decision. You can hear out different people, read opinions, that finally you'll have to make up your own mind, make a trading decision, look at the risk management, risk control. And if you can do that much, then after significant effort working on the mindset, the trading success awaits all of you. So best wishes regarding that from my side. So very warm welcome to each and every one of you. Let me also share with you another fact that unlike the Sunday stock storm, these are the Sunday stock storm where I think I have added significant value. Where I think I've added or adding significant value, there only I charge. Usually other things remain open to all public viewing in my YouTube channel. So while Sunday stock storm is not available to public viewing, only for YouTube members, this will be released publicly in my YouTube channel. So you'll be able to review this recording if you want, again by going through my YouTube channel. And any of my sessions, which you might be aware definitely by right now, if you want to join in future, just have to come up here in the routine, look at which are the free sessions going on, open to all sessions, just join them. And if you have queries, you can ask, like today's session after my talk is over. If you have any specific queries, you can ask regarding the financial markets. So thank you everyone for taking the time to join here. I hope, everyone is able to hear. Thank you for confirming. Someone said not able to hear. So Giri sir has confirmed able to hear. Thank you. So let's start. I'll start by looking at the overall market condition. And to do this analysis, either I'll use the line chart or I'll use the rainbow setup. No other type of chart I'm going to use. So first I will tell you that we are in a distributive phase. From the line chart, highs are, this Dow structure is broken. Nifty is no longer bullish. That's very clear to me. In addition to that, this is not directly related to Nifty, but I told many of you long time ago, when the US interest rates will be hitting these levels, I will be very worried on stocks. So I can't fully forecast whether a mega crash is coming or not, but I've taken precaution. Personally, I've gone significant portion of my stock portfolio into cash. I'm not holding significant quantity of stocks anymore. As market, whenever market guides me, I try to listen to the market. Market is clearly guiding in the weekly chart that it is no longer bullish. Let's remove the line chart, because with the rainbow, I'll get a lot of information. More information than I can get through the line chart. So first I'll look at the level of risk. Level of risk in the market. The weekly chart first. So let's look at the weekly chart. Overall risk level has notably changed. Last week we saw ये जो upper meter that you can see, it shows the risk on equity as an asset class. So overall I can see, compared to last week, these were green. Now the risk is accelerating. Downside risk is rising. India is notably better, definitely better. Few reasons. Our problem is the oil inflation, and we are less exposed to the AI sell-off, which happened in Tesla, Google, AI stocks, semiconductors, Nasdaq. So we are overall less exposed to this. So this is one positive news. But with the risk now elevated, there is a notable chance remains for further sell-off. Usually, I will ignore the short-term risks for trading, but I cannot ignore even the short-term risk when I believe we are in the recessionary cycle. And recessionary cycle, not just, we are in the second phase. And the first time I'm seeing there are some notable change. They were low and going down in the financial risk level. So this sell-off, latest sell-off jo ho raha hai, that is definitely noteworthy to me. When risk goes up, this is a general rule. Those who are from India, you may not be aware of. This is called a risk on, risk off concept. Whenever risk goes up, risky assets sell off. So global traders, generally, they monitor the risk levels. So that's why I'm also monitoring the daily chart. I will ignore the recession level risk here because this meter is only applicable in the weekly. Here I can see significant risk level rising, and they are in red. Drawdown risk remains very high across the asset class. However, whenever this is red, I consult this second meter, which shows that the current turmoil may not be sustainable. Means sustained downward move, unlikely, unless this starts to go up. But overall, the risk level has significantly gone up. I'll be very careful with the risky asset, which I have been. I told you I've squared off the majority of the equity, not fully. Majority of the equity, like I'm holding Singapore, I'm holding several Indian stocks. But majority, I'll say 70 to 75% of my portfolio have moved away from equity back to cash. This is a measure I usually do when I think we are in the recession risk level. If you're not comfortable, I'll keep the line chart of Nifty in the background, so I don't need it. For the latest reading, it is best I apply the meter because Nifty closed 330 and by 330 risk levels were high. I can note the latest risk level by applying it on S&P 500, which closed around late night 1:30. So here the risk level high means further drawdown seems very notably high. If I look at the daily chart, pure beautiful Dow structure, it is telling us that S&P 500 daily chart is bearish. I'll show you Nasdaq also, though it is not directly related to Nifty. Let's look at the weekly chart, a beautiful double top followed by the breakdown. And in the daily chart, it's clearly in a bearish phase. Nifty in the daily chart, say daily chart, I'll say next 20 days to a month, notably high compared to before. So further sell-off hone ka chance remains very high. So be careful with any kind of risky assets, which is equity, crypto. These are considered high risk assets. So I'll be approaching equity. Aisa nahi ki will not get no opportunities. Even in the, I've said in the worst of the crisis, such as recession, there are always few stocks which not only go up, but they double or triple, which is not difficult to understand intuitively. Suppose a world war comes up, then definitely the ammunition stocks, military stocks, they are going to go up. Like with the latest turmoil of Iran war, Lockheed Martin can go up because that's a defense stock. But overall, the equity market, majority of the assets under equity, they are likely to face notable selling pressure. The only good news that I can see that my sustained turmoil, which measures this drawdown, can it be sustaining? Looks like there still we have safety. This is still looks like a short-term drawdown rather than a sustained turmoil. Let's review it in the 2-hourly chart, which is for extremely short term. Because if something changes, it will change here first. This is the relatively positive news. Drawdown risk falling. And over the weekend, Donald Trump has once again confirmed he is not yet sure whether he will use the ground troops or whether he will increase the tempo in the Iran turmoil. But geopolitical risk in the Middle East remains notably high. Nothing to cheer here for now. Compared to that, if you look at the Nifty chart, it has not yet declined very big. And if you compare the short-term chart, 2-hourly, this is actually a positive Dow structure before the end of the day. So immediate basis on a Monday, if we get Nifty certain upside move, there is nothing to be surprising there, even with the risk rising. A positive Dow, along with in the very late hour, let's look at the S&P 500, 2-hourly chart, drawdown risk started falling just before around the close. So this is the only positive here, and the positive is looks like the trouble may not sustain for long. But as long as risk remains elevated, my recommendation, friend, always that you be careful in your approach towards stocks. Be more cautious, cut down your quantity. Don't go for too much breakouts. Many people are complaining that breakouts are not sustaining. Naturally, because the environment is not in Nifty breakout friendly. And not breakout friendly, always ask the market. Market will guide you. From this Dow structure, from 20th July, at least from 20th July, the Nifty has not been at all breakout friendly. Now let's close the risk master, and we'll also close the line chart and look at the market with more details with our rainbow system, which gives us notable idea. I think the environment currently is not suitable for the SIP still. Bad news. And this has not been suitable. I've warned around this top September, October 2024. And since then, if you continue to go to the passive mode, all you are earning is very, very low return. And the inflation is basically eating your wealth, and you are basically earning a negative real return. So proper portfolio level management will be very vital at this point. In this bullish candle, though there was a buy signal, and was nothing to cheer about with the buy signal. Because in the rainbow system, there was ample warning with the white cross being outside, which is a warning system that something is wrong. We cannot become fully confident. Now the bears are starting to take over. Main support point, if the 23,700 decisively gone, next week and upcoming weeks, Nifty can see notable, very big sell-off. And once again, the possibility of touching 22,500 will open up. I have been warning you for quite some time. What has been worrying to me is this chart, the monthly chart of Nifty. The sell signal has remained active. And those who are aware of the rainbow movement, it tends to decipher the market movement. After the sell signal, a correction is very natural, which is happening. And if the bears are strong, the correction will not last more than 3 candles, which I can see 1, 2, and 3. Going forward, I will say if Nifty cannot recover decisively, there is a strong, very, very strong chance in the short term, Nifty can go up to 21,000 in the first run. But that is not the trouble. First run, matlab 2,000 points gone, matlab around 10% gone. There is not the real trouble. Real trouble is if it starts to break lower, then there is not much to support Nifty almost until, I'll say, 14,000 mark. I'm not forecasting. I'm just looking at the market. Same thing happened with the gold. Weekly chart. These are similar how market tends to create the wave. First the sell, the correction, then gold comes down, and which happened with silver as well. With my setup, I try to understand these waves in the market. Sell, correction, next wave to the down. So at this point, I cannot rule out this possibility because trading is a game of probabilities that Nifty can come down to first round 21,000. If it can delay this coming to this 21,000, then it is quite positive. 21,000 will be the base. But if it moves faster to the 21,000, then there is a solid chance that over time, and I'll say by next year, Nifty could be down a way lot more. This is more similar to what I've been highlighting is the 73-74 recession. When market went down, but it took almost 2 years to decline 50%, means slow death. Unlike COVID, which happened very fast, 1 month, and then the full V recovery. And with, as I've shown you, with interest rates rising, cost rising, oil price high, usually who came to the rescue during the COVID crisis is the central banks. They started printing money. But now they can't do it if the interest rate starts to move higher and inflation and the oil remains high. So traditional rescue package cannot come to assist the equity market. So overall in this situation, my approach is to avoid. But I can still earn money, notably good money, 12%, 12.5%, 11.5% annualized return by choosing more safety instruments such as bonds. But it does not mean that equity stocks cannot be found. That will go step by step. If you are interested in the stock part, then the chart you will be following, not Nifty. Nifty is more for derivative trading. And a general barometer. This is the Nifty 500. This is you should look at, not the Nifty. Here is also some correction. But you can see the chart compared to Nifty, notably better. Let's remove this. Let's look at our pure line chart. This one is also suggesting that Nifty 500 is no longer bullish. So because the Dow structure is broken. Many of your stocks, you will see they are coming down significantly. I will generally try to avoid if a stock is creating swing break, no, but a negative Dow structure. I hope you are aware of negative or bearish Dow structure. I'll prefer not to hold such stocks. So overall Nifty 500, notably better than Nifty through our line chart as well as the asset master we can see. So stocks can still represent you some opportunity to invest, unlike what we saw in Nifty. And within stocks, there are segments which are much better. Let's look at some of the charts. Mid cap Nifty, even though it is correcting, let's focus on this probability. Sell trade win probability remains low, only 21%. That means what will happen or likely to happen with this is more consolidation. But with the candle being low, candle size agar aap dekhoge is very small. Small candles are easy to reverse by the bears. So I'll be slightly careful in the mid cap, but much better chart than Nifty. And if I look at the daily chart, mid cap is facing the sell-off. If mid cap sell-off continues, mid cap now has quite a good support. Mid cap index. This is the support area. But if the support breaks and continues, then I'll expect mid cap Nifty to drop towards 13,500. Matlab 1,000 points around or 7% will be gone from mid cap. Let's look at the small cap. First the weekly chart, then we'll come to the daily. Small cap and the micro cap, after the Iran ceasefire in April, they were the best area to invest and look for stocks. And look at the probability here, कि despite the recent sell, probability of winning remains notably high, 68%. That means if you're interested in finding the opportunity still, and you have to remain in stocks, you don't want the bonds, then your choice has to be towards more small cap as well as in the micro cap segment, where the probability of winning remains notably high compared to Nifty. Matlab underlying stocks, I'll say, still positive compared to what we saw the broad index Nifty. But in the extreme short term, let's look at the daily chart is bearish. And anybody in this business, you may use different setup, that's completely fine. But anybody in this business who will not listen to the market should not be here. Because this is not a fun game if you start losing money. And market is clearly guiding you with the most purest form of technical analysis, that is the Dow structure, that it is bearish in a distributive phase. That means what do you need to look for? Let this correction pass. Wait for the next opportunity. And during this distribution phase, stop avoiding being aggressive towards breakouts. This is not an environment for breakouts. Same you can see for Nifty small cap. Moment this was gone, this high is gone, market told us that I'm no longer bullish. It did not say, hey, I'm bearish, which it did in micro cap, but it is no longer in the bullish phase. That means being over aggressive into stocks is a bad idea right now. Rather, if you have to remain in stocks, what are the ideas? Outperformance sector, as well as more buy support opportunities rather than breakout opportunities. Look for quality, spend time not just jumping into stocks, but which stocks do have underlying quality business. Because stock ka two part hota hai. One part is the sentiment driven. That is some Nifty going down or recessionary chance or Iran war, crude oil going up, risk level going up. So these creates the bad mood, stock sell-off. Another part is underlying the stock lies a business. A business earnings, business income do not fluctuate like the stocks do. So one part of the stock is driven by investor sentiment, and another part remains the quality business. But we need combination of both, means you should not be in a stock with a negative Dow structure. But these are the good times to look for who are those businesses where the underlying business quality seems to be quite good. So overall, we can see Nifty is not in a great phase, underlying pressure, and the pressure is coming more from the recent change on the risk level, not from the AI trades or AI stocks going down. If we compare the weekly chart of small cap and the micro cap, it does not have the negative significant Dow structure. So I can't say small cap, it's bearish. Same I can see with my rainbow setup, it's not calling bearish. It's calling a very notable correction. So that means there can be coming up opportunities later when the correction is done with. So how would you know a correction is done with? Obviously, it is easy with the rainbow setup, which many of you have because you are rainbow members. Or if you don't have it, wait for a positive Dow structure here, and positive Dow structure will look like this. Or an important swing break, like an important swing break happened here. This will give you confidence to add or increase your risk appetite or your aggression level. Another way I prefer to look at, this is the plain vanilla chart, means plain index chart. Plain index chart, it can show us broadly what is going on in the index. But to find out stock, I prefer to look at the outperformance chart, comparing different segment. Say this is the Nifty 100, which is the large cap. And large cap has not been good for very, very long time. Matlab March. Largely underperformed. Better to avoid. Still not good. You have seen if you had remained in Infi, TCS and some post in X are coming, had you stayed in Infi for 5 years, return is zero. Asian Paints for 1.5 years, return is zero. Lot of post coming. It was not surprising to those who are listening to the market. Market clearly told us, at least from this time, if you remain in the large cap stocks, you are at least going to underperform. And March onwards, one of the best areas to go in was mid cap, small cap, and the micro cap. This is the mid cap. Mid cap outperformance is fading. I have a sell signal. So no longer very strong outperformance I'm seeing in the mid cap. This gives a more clear picture which segment I should look for opportunities. It will be much easier if the reason I chose the bonds rather than stocks is the outperformance. Over the last 2 years, those who are attending my session regularly, I have kept very high quantity of bonds in my portfolio compared to stocks. And for the last 2 years, I'm beating almost every index by choosing the bond. Not individual stocks, I'm not talking, but bond. But when I go individual stocks, I can't exactly compare with the bond because stock risk is high. Return is not guaranteed, but bond, I get what is promised to me. So mid cap, what I see is kind of fading, the outperformance. The daily chart sell off, and there is a notable chance of further correction. Those who are with the rainbow, you understand the window concept. And weekly chart also, there is a notable no support nearby. That means mid cap can now start to underperform. I'm not projecting, but this probability has increased. I'll mind it that there is still 61% chance that this outperformance can happen. But take a cautious approach towards mid cap. Let's look at the small cap. Still better. Just undergoing a minor bump. Candle remains very big. Big candles are not easy to reverse. Reversal nahi aana possible nahi as long the candle is big. Candle going bigger means a lot of things for me. It means the bulls are trying to protect. That means small cap, after this small bump is over, can once again start outperforming. However, remember, outperforming can happen different way. Say mid cap can go down, small cap can also go down. If small cap goes down lower, less, it will outperform. But it is clear if I have to remain in a stock, towards stock, it has to be small cap and to some extent micro cap. These are the areas still notably positive. After this small bump, look at micro cap. The bulls are trying to come back. And here lies the important secret. Whenever after a correction, let's see this phase, after a distributive phase, you can see a bullish Dow. Here is a bullish Dow. Almost always, not always, but almost always, a new leader will be emerging. Means in the last rally, which say started in March, April, May, in the micro cap, small cap, the stocks which have gone up, their time is over. Over means I'm not saying they will crash down, but they will not give you the super performance. Where now a new leaders will be emerging in this comeback. This gives any stock trader ample opportunity. If they wait, another round of group will start to come back. Let's look at the small cap daily chart. We don't still have the comeback compared to what we saw in the micro cap. Short trend once again turned bullish. The background turned green. There are warnings, but underlying what a trader will look for, stock trader, in the micro cap, who is the next one coming? Who are the next level of leaders? So looking at this weekly chart, I'll definitely focus more on the small micro cap, completely avoid the large cap, and take a cautious approach towards the mid cap. Same way I can come down to the sectors, which I did, and I have prepared this for you. This will let your homework of the weekend have done. Which segment is outperforming? It's once again EV. Since it is EV, I have not today prepared any new PPT for you, because last week we already discussed what are the factors you look at EV. EV ke kya dekhna chahiye? We are done with that. Every time a new sector comes up, I'll prepare a PPT. But I'll look at some of the important stocks within the segment. Your job should be, a trader's one of the superpower is to look in the outperforming sector. And EV was down previously. Then it became leader recently. Similarly, I'll say IT is down. It was as low as 10. Energy level was IT 10. It is now 50 in the outperformance trend. And same happened with the EV. So this sector rotation is about what? When a once again sector is coming back into focus or coming on the top levels, always new leaders will be emerging. And you should look for, if I can get a good entry points during that time in any of the top stocks within the segment. You can add fundamental to it if you are looking at the weekly chart. If you are playing with the daily chart, the short-term swing, then the approach is different. Fundamentals do not matter much. Then the volume, big players' participation, proper certain patterns like we have shown to Rainbow members, rectangles, they matter a lot more. When you look at the weekly chart, then the classical chart patterns, rainbow base, quality of the stock, they matter a lot more. So choose whichever. I can't decide how you are going to play, but I can show you finance, housing, infra log services, private bank. These are not the top areas anymore. If you are interested in finding the best opportunities are the EV, look for if there is any good entry. Healthcare, pharma still. They are the ones still outperform. If defense comes back, there will be new group of leaders emerging in the defense. So today I'm going to do next, before I start taking your question, I'll go to individual stocks and I'll give you another important trick, which I think I've given the Rainbow members. I'll once again repeat it for all of you. But first, let's look at the EV segment. And please consider that I strongly believe risk management rule number 1, you cannot become a good trader, good investor by listening to others. कि बाकी लोग क्या कर? You can hear me out, then look at the chart, do your own analysis, make up your own mind. Nobody has become a good investor trader taking tips from others. No one. On record. You can check, cross-verify, it's no one, zero. So you can hear out, take out different ideas, start analyzing the market. Like Rainbow is our tool to analyze the market. In itself, as I've said, individual, yeah, buy signal is there, but itself it's not a strategy. One can create several strategies with that, like you do with the candlestick. So last week we discussed some of the opportunity which I was looking at. One of them was Mahindra and Mahindra. And I have now updated my stock master, which now include the fundamental. I will increase the size of the meter. Sorry, remove the compact mode, means the full fundamental will come. It is making the base. Whenever a stock makes the base, I'm interested. Initially, I will not be able to do very large quantity because my scores are not ready. Let me increase this size also. What my scores means, the scores, thanks to my great mentor Sachi Hata, the scores tend to help me find out the gem phase. Gem आप जानते हो, jewelry gem. So gem phase. जेम फेज एक ऐसा फेज होता है स्टॉक का व्हेन इट टेंड्स टू गो अप फास्टर. करंटली और भी कुछ मीटर छोटे हैं, लेट्स मेक इट एटलीस्ट नॉर्मल. Currently it is not in the gem phase, and I did not buy it yet because there is no buy signal. I minimum need that. So when I get that, I will personally prefer to wait. Why it caught my attention? First of all, the base. I give more importance to the technical. I'm a technical guy than more of a fundamental. And in the fundamental, I can prepare from my knowledge, I can prepare many fundamental. Like quick ratio, asset turnover ratio, other many ratios. But here what I apply is the tricks. Few fundamental tricks. What caught my eye is a large cap. Number one, M&M is a large cap, means it's an underperforming group. Large cap is underperforming. We have seen that. It's a company. Large company means it's an elephant. Elephants move slowly compared to a deer, small one. Means they are more dynamic, easy to change. Leadership is dynamic. Whereas large cap have other advantage. If a real storm comes up, flood comes up, deer is in bigger danger than the elephant. So here what I can see, and I think majority of you can also see, slightly इसको बड़ा कर लेते हैं. I hope it will not go out. Yeah, leverage is fine, debt to equity outside. Earnings. That's every great trader, some of them like William O'Neill, David Ryan, Mark Minervini, they have highlighted. This is that earning has to go up 40%, and it's a overall steady rise. 3-year, 1 year, last quarter. Revenue steady rise. 3-year, 1 year, last quarter. That is interesting. I have a overall not great but okay can slim score above 50. I'm not bought it because signal not there, it's support not there. Once I get the signal, I'll start small. About 20%, suppose I do 1 lakh in a stock, I'll start with 20,000. Then I'll patiently wait because it has a danger window ahead of it. But once the stock is above confidently 3350, my confidence in the stock will go up along with if other signal I get. And it can give me, with this comeback, some significant run on the upside. And why I like base? Because risk level remains low. That is my focus, ki risk low rahe. Another stock I have highlighted last week is the Bajaj Auto. Here I have gone in. Like Mahindra, I have not gone in. It will take time because of the fundamental meter. Bajaj Auto I have bought. I told you I'll buy. It was above my levels, 10,500. 10,500 के बाद beautiful break. It is not to suggest you do the same because I can't predict future what is going to happen. It followed my rule. A large cap company growing very faster rate, steady rise in the earnings. Steady, the train is moving ahead. Steady rise in the revenue made me interested into this stock. Also, the stock dividend yield is 1.7%. Not great, but dividend is growing. Matlab, it is increasingly returning the cash to investor. Few concern does exist, like operating margin, but these are not super concerned as long as these revenue and EPS is accelerating. SEDS, accumulation distribution, is showing accumulation, not distribution. This is decelerating. EPS acceleration, earnings acceleration is decelerating natural because 1 year average was 46 and currently it is 45. That's okay. That's a small bump. It has all my strength score. Certain warning is there from this. But that is one of the reasons could be broad market is under distribution. Another reason to be excited about the stock is जो लहरों को चीर के आगे निकलता है. Means the broad market you have seen is not in a good phase. But this stock is up. And this is not a small cap to go up. This is a large cap. Giant one to change direction. And along with that, those who are Rainbow members will be able to relate to this. It was pulled back. You know the pullback from here. It was pulled back. And then now it has decisively moving higher. None of my trade is done with this without stop loss. That's forgiven. But here I'll use a bigger stop. I've placed it in the system. About 10,400. I want to give it more chance. If it breaks below that, below this level, it comes back, it's pulled back again, then I'll be worried. Okay, this will now consolidate. Even if it does not go down. In addition to that, what I'll expect, anyone should expect around 12,000 there will be shake off. मतलब डराएगा. You have to keep this in mind. Around 12,000 there will be strong shake off to shake the weak holders out of this. But this seems like a good, if I draw the trend line, the more I draw, the better we'll start to understand. Within the trend line, there are shorter trend lines. So broadly, the stock is rising in a phase. And always, this is the one secret, always when buying a stock, look at its recent past movement, how it is moving. That means Bajaj, you expect movement and a correction like same wave, similar wave you expect. Means around this move, say 12,000, it's not 12, actually my level is 11,800. 11,800, then a strong correction. That you mentally get prepared for. Now, not only Bajaj, within the segment, there are few other stocks that caught my attention. I'll not say you please jump into those opportunities. The TVS Motors. Another EV stock, because market is suggesting this has the strong outperformance strength. Few reasons it caught my eye. Again, you know that this is the earnings growth. Look at it, steady rise, strong acceleration. Only issue is here I need a confirmation of a breakout. Very strong confirmation chahiye that this is a breakout. So I will possibly start with some quantity. As my white cross moves above this level, I will be more confident that yes, breakout is chances very high. So this is just an example to show you when you look at the outperforming sector, the way I'm looking at it, there is not necessarily you will be late. There could be, we have seen for 2 weeks, not just 1, 2 weeks. Last week we saw, again this week we saw, there are some companies which can be looking at, I don't know whether it will break or go up, but it has a chance. It's a game of probability. And if it strongly gives other signals, like in my case, white cross breaks higher, it will add significant confidence. These dividend yield is weak, matlab dividend should not be a measure to look at this stock. The measure should be how is the growth. And it is a very notable growth happening. What I will further dive in, why the growth is happening. That cannot be done by indicator, but we can ask AI and others why this growth is happening into this company. Along with there are other companies. Last week we had a discussion like Amara Raja. This particular one is not super ready, but it is possibly getting ready for future. It has lot of windows. Growth is there, but growth is not matching the revenue. And it is still in a not a very strong phase from the strength and the speed. But I need to keep these under check. मेरे check में रखना है इसको, because when the time is ready, so that I can quickly move and invest. So when you look at a segment, not just look at what is now. Now can I buy what? Not just now, what could be the future ones that could be getting ready. That means what I can do here, select the stock, strength score greater than 70 alert, tell me when the stock is in the gem phase. Because that time some people will say, okay, sir, you will be late. Abhi buy kar sakte. No, the buying is the price and the conviction. Then my conviction will be stronger. No, the stock can go significantly go up. Currently, as it can go up, as well as with these resistance, it can start to fall down. maybe this earning was a one-time event. But much later with this earning, I'll be confident, no, this is not a one-time event. Amara Raja, something has changed underlying. So I'm always keeping check who are the next one can be. Like we found out the Bajaj. Bajaj has been in my radar since the time it broke above this area. First time. It came into my radar. I tried. The moment it showed correction, I moved out because it is the pullback. I need confidence that now it will go up. So it has been my radar. You can see from April. But the confident trade is coming in July. Same with Amara Raja. I'm keeping a radar. Maybe the confidence trade will come significantly later. So this is, friends, a quick look at this EV sector. So I'll not further take your time. If you have any particular question, if next week some new sector is there, I'll prepare a PPT to what are the key importance like I did last week. If you have missed, this was a PPT I showed you. Why EV could be the leader with oil price rising. What you should look at the EV segment. This is the growth. This is not a technical break. There is an underlying growth in the EV. What are the policy risks with the EV? Like if battery metal price goes up, Exide and Amara Raja, we could be in trouble. Some जैसे TVS valuation is relatively higher compared to what we saw in Bajaj Auto. TVS valuation like earnings yield, dividend yield wise, TVS was little more expensive compared to what we saw with the Bajaj Auto. Some are pure EV maker, not just this one. I'll show you several others. Let me show you another one. Olectra Green Technology. Some are legacy auto, like Bajaj is a legacy auto. This is what I meant. Pure EV, legacy auto, already established in the diesel economy, or is it a new player? It is not ready. But I can see some notable growth in the revenue. That means what this one needs is to be kept in the radar. Once it is ready, place an alert here. Once it is ready, like such as the speed score. Here speed is missing. So let's put a speed score as an example. When the speed will be ready, I'll be knowing. And then it will automatically come in. So basically this trading is this preparation. Same I do with the commodity and any other trade. कि इसमें एक preparation हो गया, which I already did, ये double हो गया alert. So Olectra Green Tech, when the alert will come, let me know. And my alerts will keep hitting. When it hit, I will look into that stock. So this way, we can take your time. Initially, you will not be able to cover 500 stocks. But when you look at a particular top performing sector, that is a progress. Only 20 stocks. Once you start making this an habit, a regularity, you put effort every week, you will see after 6 months, all the sectors are covered for you. Majority have covered. Without too much effort. Sit down on a Sunday. Look at the, since I've highlighted you few sectors today, EV, healthcare, and pharma. EV has about 30-35 stocks. Pharma, healthcare about 20-25 stocks. So 50 stocks. Just have a look at the charts. Prepare, you'll spend about 2 hours. You'll mark them by the colors like I have done. मैंने यहाँ पे color में marking कर दिया EV में, which I want to keep a check. Not everything I want to buy. TVS Motor, Bajaj. This way, when you bring the effort every weekend, almost all the stocks will be done after a while. You will remain aware of those stocks clearly. You don't have to run screeners manually. You will know some things about the company. Like Bajaj, TVS, I know, okay, this one is having growth. Amara, I know that is growth is coming. That means next quarter earnings for Amara, I will be interested. Not to jump, but to confirm whether Amara का जो growth हम लोग देखें, is it real or is it not real one-time event? We can move then Amara is not important to us anymore. Like Olectra, it is suffering. But this could be the new beginner, new comeback stock once I get a monthly buy signal at the base. Last time, from a monthly buy, the price tripled, 300% return. That means it can come to an opportunity. Patiently wait for the right signal because underlying business is showing some growth. So that's all, friends. Let's see if what is the questions that has come up. Okay, this one I had highlighted. Sorry. Let me show you. This one I have discussed to you. Let me discuss a trick for you. This is a very simple, straightforward trick. Many people could have highlighted and largely ignored. Very largely ignored. Once an IPO stock, this is a standard rule, remember. Once an IPO stock breaks a range like this box, with the rainbow, box writing is much easier. But it can be done with the line chart as well. Rainbow ka box will be more beautiful. Once a box breaks and the stock, any particular IPO stock is moving to all-time high, you should be always interested. Why? Why the stock is going up? Because they can give you massive run. And those run can come very quickly. From March, look at right now, July. Within 3 months, 733 to almost 12. About 50-60% close, 60% plus return. So remember this rule, when a box, first of all, you need a box. And after the box, the stock is moving to an all-time high, the new IPO segment. You should be always interested to look into that stock. This one, look at the revenue growth. Same story comes up. Similar formula which William O'Neill highlighted to us. Growth, certain pattern, price confirmation. And then comes as much as possible riding. It is riding will be much easier, confident in the bull market. And in current bear market, it should be more cautious approach towards riding. Ether energy is done. So I've looked at ether energy. You should ride on because first of all, for ether energy, or when you are asking someone stock, should I hold or not? Always look at was your entry proper? Entry एक base के बाद था? If not, you should improve there. Second of all, I can give you my opinion because my opinion will be rainbow based. Because that's I use for this trading stocks. Stop loss is around 1446. Sorry, galat bola. 1146. Around 114046 around stop loss. If you have entered right place, there is nothing to worry about. Because if you look at pure Dow structure, did it say negative Dow? Without negative Dow, how can you exit? And if the game was the daily chart, then the situation is different. Daily chart exit has come long ago. 1267 break, it is out. And Rainbow would have given the exit 100%. Exit. Rainbow to give you almost full. Max stop hit. Background yellow, we are gone. But if you are more of a investment style playing, there is still reason to wait. There is bull fading. You can take some money off and wait patiently for the remaining. Work on your entry points. Exit is much easier. Exit is very easy with the Dow structure. This smart meter available in Rainbow website. Smart meter में sector smart. I'm regularly publishing, Rohit ji, in your in the Rainbow group. I'm publishing regularly. So look at the admin group if you're a Rainbow member. Charmi ji, first, could you please share your views on the ACE time frame? Secondly, we can buy stocks with good dividend yields at the time. Good choice. Yes and no to the second. I'll coming to the second question needs a little longer answer. I'm coming to your question later. Let me look at what minimum required for canceling score to enter in stock. I'll prefer minimum 50, but higher the score it is better. 70 better, but minimum 50. A minimum 50. If you are looking at the daily chart, short term trading, canceling does not have any value for you. Then it has to be what we look at the volume and the particular pattern I have highlighted in the classes. You look for those. Canceling will be applicable only when you look at the weekly chart or longer time frame chart. Daily chart, it will be useless. Ether energy, is it worth getting in now? No, you are biased by this past. This I've warned so many times. People are biased. Don't be biased by the past. Everybody wants to know the exit. You can't win by knowing what everybody does. You know this, right? What everybody does not work. That is part of it. Exit. You have to work on the entry points, not on the exit. Exit is easy. There will be a Dow structure, you will exit. There is no confusion regarding that. Work on the entry point. This was the entry point. Now, ether energy, can it go up? Yeah, that nobody can say. Nobody, can it go to 2000? Yeah, maybe it can. I can't predict future. What we can say for sure is risk management. It's a falling stock. You want to buy a falling stock? Why? Second of all, in which time frame are you operating? If it's 15 minutes, then possibly after this break you can buy. First, fix your time frame. Which time frame chart आप देखते हो? In which cycle? Like I generally prefer weekly, but current recession cycle, I'm closely focusing weekly plus daily. So I've chosen. I'm not looking at 2 hour, 15 minutes, nothing else. First, fix it. Then stocks give you specific areas for entry. Zone. There will be pattern. If you listen to the market, market will guide you. 100%. Guarantee के साथ I can give you in writing. That market will guaranteed give you chance. It will be people who will not listen. As a beginner, since you asked this, you should have I've covered this several times. Look for this pattern. If you are on the beginner level, this question means you are at the beginner level. Here. Go for only these pattern. Once you try to enter close to the pattern, number one, close to the break, the right shoulder break, you enter. Once entered, follow the Dow structure. Matlab, this is the break. This is the stop loss. This is the Dow swing break. This is the exit. Still, you will make money. Beginner should start with these basics. Otherwise, this is a tough game. You will lose out your capital. It will not be funny anymore once you start losing the capital. Say this one, Schneider. Move, lower head. If it creates a right shoulder and break, Schneider will be an entry. Can I buy now? No. I need to break. Wait for the break. Then follow the Dow structure. You have to come down to these rules, different rules. Rainbow is about this rule and discipline building. Now, can I buy now? Is it going, because hope will die the last. Here, anything can happen. Tomorrow, Warren Buffett may say that I am buying Ether Energy. If he says that Ether, and he will not say that Ether Energy will shoot up, maybe 2000, few moments. Warren Buffett has bought it. It will shoot up. So that cannot be predicted. And since that hope exists, people entry nahi kar pate, exit nahi kar pate. They can't do it. Because the hope is always there. Shayad upar jaye. It's falling, but shayad jaye. That always remains. That's the trick with the game. That you can't hear what will win is the rule and the risk management, money management. Nothing else is going to work. No setup will work if you are weak on that area. It will be, even the rainbow will be a failure. If you are weak on those rules building, I strongly discipline, and this is I do proper risk management. Just that I've shared in the class. So no, there are plenty of opportunities. Like we discussed, TVS could be. There is always stop loss ke saath. So Ether Energy, no. What if you want to buy the Ether Energy? Say no, I sir want to buy. I know something about Ether Energy. Then let the market confirm. How the market will confirm? Easy. If you don't have any indicator, Dow structure. It will confirm. Here it confirm. And you should ask, I want to buy Ether Energy. Why was I not interested here? Why now? And look at every you and me within. This is, we have bad trader inside us. The bad trader, the emotional, super emotional bad trader. The bad trader, ये question आप पूछे कि can I buy in a falling this one? That means it was the bad trader inside you. You look at what the bad trade, the moment you feel with this question means the moment you feel anything for any stock like this, you should be more careful, introspective. Is it the bad trader or emotion speaking? This happens. This happened with me in one aluminium trade. Signal came, but before the signal was confirmed, as I was overexcited to take the aluminium, I took before the confirmation. And the punishment was swift, immediate. The loss hit was 0.6%, 0.65% of account was hit. Brokerage gaya, faltu cost bada, which I could have avoided. So it's a continuous journey. The bad trader always inside us. So it's a continuous improvement. Don't jump into it, lose out your money. So let's look at ये जो चार्मी जी का question. She asked the second question, very, very important. So let's look at this. First of all, ACE, ACE. And ACE, let's look at key weekly chart should always be looked at. What the Dow suggests. It's a good comeback. Look at least what we have here. These are the patterns generally tend to do better. This is a shoulder, head. This is the right shoulder. Head and shoulder, inverted head and shoulder pattern again. Head, left shoulder, right shoulder. The break, the move. No, it's super intelligence nahi chahiye. It's more chahiye, more discipline, and obviously few tricks. Definitely, if you know, like on a breakout day, जो संजय sir पूछे थे, on a stocks breakout day, gap ups are good. Gap ups are not bad. So what Rainbow can give us more information here. The problem with this stock I see is the resistance. It has missed the window. The window is gone. That is the time analysis ka part. Now be careful. It is above 37. It moves higher. You are earning money. Try to move the stop. If it corrects, start correcting from these levels, 1100, 1090, expect a drawdown and then expect a break much later part of the year. Overall chart wise, it is strong, but fundamental wise, not so strong. So overall, I'll not say it's a bad pick. It's a good pick. It has some still more room to run. At least 4 to 5% is has room to run. But I'll be very careful around because the window is now gone. It cannot escape via window. It will have to go via the flat line. It can break this flat line. So इसीलिए बोल रहा हूँ, be carefully watch कि around what's going on happens with the around the 1100. If there is a rainbow signal or a Dow structure, book the profit, wait, and then re-enter again much later, because once it corrects, its breakout will come much later in the year, possibly November, December. And second, you asked about dividend yield. This is an important question. First of all, कुछ rules हैं. For example, this is largely used by money managers and particular specific strategy to outperform the index. Within the index, if you choose the stocks where dividend yields are the highest for a year and hold them for say 1-2 years, they are likely to outperform the index. But I personally is not a big fan of this. This was back tested. So that's why I highlighted. So let's look at Tata Consultancy. Tata Consultancy from a stock, it gives very good dividend. Dividend yield is about 3.2%. In some case, it could be higher. Let me check if INFI is higher. Stock fundamental, if you want the setup to move faster, just unclick the stock. It will move faster. Similar 3.8%. This is not a bad yield, or in some case you may get 4, 4.5, even up to 6%. But this kind of charts, just because dividend yield is high, is not great. Because if you, even in this area, dividend yield was high, but the stock was from there, that level down 40%. When a stock is in a down phase, dividend yield will not be enough to protect it. But you have highlighted a very good point, because dividend yield can give you the cash income. And a very vital component when choosing large cap stocks. Large cap stocks, good dividend yield is very good news. But dividend yield strategy के साथ, if you just add this small, this will close now, our time is over. You just make one strategy simple. I will wait for a Dow structure in the weekly chart, because dividend you want means for 1 year, 2 year, you are going to hold. So in the very long term chart, such as weekly or monthly, you wait for a beautiful Dow structure, have a good dividend yield, then it works more beneficial to you. Just because the dividend yield is high, if you had remained in stocks like TCS, Infosys, you would have lost a lot of money. Infosys can come back now into strength. But those who know the rainbow, you can do the analysis. You know, with the window, it can drop way more. It can come down lower in the current 4-digit to 3-digit. If it comes down to 600, 700, I'll not be very surprised with this one. And this one is a candidate for long-term underperformance. Unfortunate, great company, great founder, but unfortunate. That's unlikely. I'm not going to buy anything INFI or TCS just because dividend yield is high. So that's all, friends. Thank you so much for attending today's discussion. We'll meet again next Sunday to see which sector is outperforming, and within the sector, if there are any stocks I'm interested, I'll highlight them. But none of them, once again, will be trade or investment suggestion. So best wishes from my side. take responsible risk, I'm sure all of you are going to do very, very well in trading and investing.